Hello and welcome to The Upgrade, the CoStar News Hotels Europe, Middle East and Africa podcast. My name is Terence Baker, News Editor EMEA at CoStar News Hotels, and we're coming to you from the Bluefin, right behind the Tate Modern here in London. I'm thrilled to say we are joined today by Katharine Le Quesne. She's the Managing Director at HoCoSo's, Hospitality Advisor, lecturer, course assessor at such storied educational centres as the Cambridge Institute of Sustainability Leadership and the world-famous Glion Institute of Higher Education. And for many years, you might have known her as for working for Deloitte, the advisory, travel, hospitality and leisure. Welcome, Katharine. Really good to have you here. How are you?
Thanks very much, Terry. I'm good. Yeah.
Excellent. It's good to hear. Now, we're going to talk about sustainability.
We are.
It's a topic that goes around the conference scene, but I really want to dig into it with someone who's very, very familiar with it. Now, let's start off with a recent history of sustainability over the last half a decade since the end of the pandemic. And we've had notable news such as the 2030 Agenda for Sustainable Development, all the targets around that, which probably most businesses, not just hotels, might have missed or might be struggling to achieve. But can you give me some sort of notion as to the history of sustainability in the last 5 years, where we are now?
Yeah, it's a really good question, Terry. I'm going to take you back just slightly before that, because in 2015, the Paris Agreement was signed by 196 different parties and
different countries.
Different countries, and that really was a trigger for an awful lot of the activity that came as a wave as we approached 2020, and then actually felt like it really accelerated post-pandemic. So the Paris Agreement was really people signing up, these 196 countries saying, we will seek to try and limit global warming to below 2%, and ideally 1.5% above what we call pre-industrial levels. And I won't get bogged down too much in the detail. But what that did was to really focus a national attention to how businesses and countries were running their commerce and the environmental impact in particular on these countries. So I'll talk about the Sustainable Development Goals perhaps later, but this focus very much on the environmental impact really accelerated as we got into post-lockdown, and we came out of lockdown and into sort of 2021, 2022. And if you remember, it was the hot topic of every conference that we went to. Hotel companies were making great statements about how they were seeking to build a more sustainable business going forward. And that was very focused in a lot of cases on the environmental aspects, but also actually increasingly on social aspects of sustainability. And by that, I mean things like diversity, like human rights and good working practices and well-being in the workplace and so on. So we made great progress, I would suggest, in terms of the global momentum was looking good. And then I think one of the challenges you have with all these things is, particularly in hospitality, is this comes at a cost. And it is also very influenced by legislation and regulation. And that regulation and legislation is very influenced by leadership and political will and political, if you like, the agenda of the particular government. So that was where we got to. And I think we've seen 2017, when Trump in particular came into power, he rolled back from the Paris Agreement. Then Biden took everybody back in again. And, the US is a big player in that. But the EU actually has, because of the scale of its geography, has probably been at the forefront of sustainability activity and legislation.
Would the EU now, on Donald Trump's second coming, of course, where he's pushed it back perhaps yet again, does the EU now need to take the issue by the neck? And I mean, it's a huge economy, as large or just a little bit smaller than the US economy, but 43 different nations, a huge mass of people and culture, etc. Is it time for EU to be a little stronger in this?
Well, I would suggest that they actually have led in many ways, and have been at the forefront of a lot of decision making, a lot of legislation that talks about climate reporting, and that looks at plastics, that looks at generally emissions in businesses, and more importantly, decarbonisation of energy networks and so on. So to a large extent, I would think they've operated quite independently because they are a club, they are a collective. And in some ways, that makes a difference. Now, the implementation of a lot of this and the nitty gritty of the detail is always going to be challenging. As of the EU Corporate Sustainability Reporting Directive, which is all about how companies report on sustainability activities and impact. The EU has certainly recognised, I think, that they have received a lot of pressure from businesses and recognised that this is a huge burden on a lot of businesses to actually implement this reporting to the level that was being suggested. So I suppose what I would say is this is an ongoing evolution. The need to decarbonize, the need to embed more sustainable practices, protect biodiversity, solve our plastics problems hasn't gone away. But hotels, businesses, societies are under different pressures. And as soon as you start to get financial pressure, be it the cost of living crisis over the last few years, yes, or be it a particular change because of leadership change, you're going to get bumps along the road.
And the United Kingdom presumably likes to say that it's leading the conversation. It may be, maybe not, but somewhere the UK probably lies somewhere between the two, the US and the EU. I mean, we're a small island battling to become friends with everybody. I mean, how's it going on in this country?
Yeah, and I think you're right. Look, I'm no sort of legislative expert, but I think we have made many public statements about net zero by 2050. And to that extent, I think, again, if you look at the current government, they've got a range of different pressures. And I think at the moment, sustainability has become a bit of a football to be kicked. In some countries, not kicked into touch, but there definitely is a loss of momentum in the whole arena.
Well, the day before we recorded this, England won 5-0, so maybe we're onto a roll here. We'll get onto a new term I heard recently, which is green hushing, in a minute. But a lot of it's sustainability. A lot of the onus to do that is based around profitability. You make it profitable, you turn it into something that becomes profitable, then the CFO is going to understand it, and then a whole company is going to understand it. How are companies making sure that they can absorb, that's the right word, sustainability within the bottom line, within the profit of their companies in the hotel industry? I mean, what are they doing? Is that successful, or is it a kind of little accounting exercise to one side of the main core of the business?
So look, I think sustainability measures need to be profitable, and we talk about the 3 Ps, if you like: people, profit, and planet, right? The E, the S, and then profitability. And one of the things that we've seen with some of the energy-related investments, i.e. going down more renewable energy, sources, or in the case of hotels, upgrading, refurbishing assets so that they perform better from an energy and operating cost perspective. That can translate into real financial returns. And I think there are sort of two sides to this. One is that you can positively influence your operational costs. The other one is actually we're talking also a lot in investment about long-term risk. And when an investor is coming into an asset to say, are we sufficiently future-proofed? So circling back to the comments we were making about legislation, once they sort out what you have to report on, when you have to report it, and how assets should perform, investors will want to know that they are not in a position when they're about to exit in, let's say, if I'm private equity, in 5 to 7 years or slightly longer, that I am not going to be chipped because I haven't future-proofed my asset, the actual fabric of the asset.
And you're future-proofing both for what the guest wants, and we hear all the time they want greener, they want more experiences, they want more local, etc. And as you quite correctly said, future-proofing the exit of that hotel,
yes,
that piece
absolutely.
of real estate.
So there's an operational consideration here, and then there's an actual asset consideration in terms of what you invest in.
Most hotel businesses understand that, I assume.
Listen,
investors, etc.
Yeah, it's a good question, Terry. It's going to always depend on the type of investor we're talking about, the type of hotel I am, where we are in an economic cycle, and what sort of market pressures or legislative pressures I've got around me. And one of the sort of elephants in the room so often with sustainability, in my view, is that a lot of assets have been built, bought, sold, operated by investors that are investing on behalf of their shareholders, and they have a fiduciary duty to deliver shareholder value. So there is a very real primary priority, which is financial. And that's absolutely right. You signed up to those rules. What we have at the moment is a system that's struggling here with some of the sustainability targets and needs, really, is that some of those, we haven't yet worked out how to value the sustainability measures. So we haven't worked out, not in all cases, but in a lot of cases, we haven't fully worked out how to apply carbon pricing to things and what carbon credits really mean for our business. And until the industry sort of gets to grips with that, and until real estate funds or institutional investors or whoever they are can communicate and deal in those concepts, I think we're in this transition period on many levels. But if you've got a shareholder value driven system and one that talks about carbon value or future proofing assets, the two at the moment are slightly uncomfortable bedfellows.
Do we have still the existence of loopholes in terms of offsetting your carbon credits, etc.? You can just bung a lot of money in one direction, not really have to worry about it. And secondly, you mentioned the shareholder value. If private equity is coming in and flipping that hotel every 5 or 7 years, does that make it much more difficult for them to actually install the greenness of that property in that 5 to 7 year period? Or are they more likely to do it because they want to be good on the exit?
So
two different questions.
So much to answer. So your first point about loopholes, there's always a loophole, I mean, let's face it, in anything and everything that we do. I think the whole offsetting and carbon credit piece, it is an important part of the whole net zero calculation. We just by functioning emit carbon, and therefore there is always going to be a component that needs to be offset. And it's really the whole net zero kind of journey, if you like, is about reducing as much of your carbon emissions as you possibly can, and then finding a credible scheme to offset. And that might be sort of accredited tree planting schemes, or it might be mangrove planting schemes, or there are a whole raft of them.
And do you try to put a price on everything? Because that would also make sense to a lot of people, making this a very simple mathematical exercise.
Yeah, and I think that's you've just sort of hit the nail on the head. We really need to get it to the point where it is actually very transparent and very clear and is a very simple mathematical exercise. But actually at this point, it's all extremely complex. So that whole sort of, I would say, carbon credit and carbon markets piece of the puzzle will evolve. But coming back to your point, getting back into hotels, we're definitely seeing real commitments from all types of investors to creating real estate that has a better impact. And that is an environmental impact, or that is a social impact. It is being embedded across many of the businesses that I come across, many of the real estate assets that I see. We have to recognize that. I think the statistic at the moment is something in the region of 70% of all real estate has already been built. And that will have been built under standards and conditions that don't perhaps meet the LEED Platinum or BREEAM Gold Standard or whatever certification systems of today. And therefore, there is a huge piece of work to be done in retrofitting assets to improve their environmental performance and improve the quality of the space that you create.
That makes conversions a little bit more expensive, but as you say, on the exit, that's where the value comes. I mean, the value is created when you build, isn't it? When you construct, of course. So I always say that, but it can give you more freedom and flexibility on the exits, I imagine.
Well, and also when you build an asset, there's a lot of carbon embedded in your asset. So if you look at some of the companies that think about carbon differently, they say, I already have a carbon balance, if you like, in this asset. So don't pull it down, make it operate better. So I think we're going to see, we've certainly seen a lot of that going on, the refurbishment piece.
And my point about the 5 to 7 year hold and whether that's an advantage or a disadvantage?
It's always going to depend a little bit on the asset
and on the investor.
Isn't that always our answer to everything?
It is.
Depends on the location and depends on the investor. But I think that and we've discussed this for many years, is there going to be a brown discount or a green premium? If you haven't done the work, you might get a brown discount. If you have done the work, you might get a green premium. The answer is somewhere in the middle, which is, I suspect, depending on the investor that buys from you and where the legislation is at the time and the competitiveness of the market, that there is always a risk of a price chip. If somebody thinks, in order to get my energy performance certificate up to top notch, I'm going to have to invest quite a lot more. Although the asset appears to be in good condition, its energy performance is poor.
And in terms of financing, the idea was that you would not be able to get the financing for your hotel unless you ticked all the boxes in terms of sustainability. How's that going on in Europe?
Well, just as you said about loopholes, there's always a banker willing to lend you some money no matter what you're doing. And that's not to hit the bankers, because they play a very important role in our system. But as there has been for a long time, there's a raft of different financing out there depending on what you're looking for. And the green loans and sustainability linked loans are very widely would I say widely understood? They're certainly more widely available. I have just been actually at a conference where all the bankers on the panel said we definitely do green loans and sustainability linked loans. So it's a very important part, I think, of the loan book, or at least of their strategy to evolve green finance generally. And these will depend on what you're raising the funding for, and whether they're specifically for capex finance, that is to essentially fund the transition to a lower carbon asset, or whether it's all to do with the actual ongoing performance of the hotel, and the reporting requirements that come with that can be onerous. And that's really, I think, again, the bit that we've got to fix is making it easier for everybody to do the right thing.
So that might be easier for a 5-star hotel in the best location on the south coast of France to perhaps do it the way they want to. While you have a city centre hotel in Berlin, you might be a little bit more conscious of being green, or is that a real? It's probably a real.
No, I think it's really brand and owner driven. So if I look at some of the luxury brands, they're very focused on sustainability. You know, Six Senses, it's always said it was core to its DNA when it was very first set up. That was the sort of one of the core aspects of it. I think Mandarin Oriental has produced a sustainability or a CSR, corporate social responsibility report for 15 or more years. And so I think the more interesting thing is going to be, can we, in this age where we're all talking so much about AI, can we deploy AI more effectively to make all of this easier, make the reporting easier? And the answer is yes, because we know there are already systems that there are suppliers or providers out there that will assist you in reporting on your performance, will enable you to monitor the performance of your asset and therefore report on it. And once we've got data and numbers, we can measure the size of the problem or the size of the improvement, and then you can start actually quantifying some of this. So I think we'll actually see a resurgence in some of this in the years ahead.
Well, I sincerely hope we have been talking about some positive aspects of this rather than just finger pointing at different companies. I mean, the average guest at Six Senses and Mandarin probably have the capital to invest themselves into this green topic. And of course, when you go to any beautiful resorts or on holiday, you want to have a couple of weeks where you are feeling at one with nature, sustainable, whatever the term might be. So maybe in our industry, there's much more alignment between the guests and the hotelier and the investor. In general, in real estate, maybe that's a little bit more difficult to do. We've heard the term greenwashing. I'm hearing the term now green hushing, which has probably been helped by our friends in the United States government putting it on the back burner. Is green hushing a term you're hearing, or is it a term that you think companies are doing?
Yeah, so look, so greenwashing, just for clarification, is really when you are making claims about sustainability that are not supported by reality or by data and by fact. And then the green hushing terminology is really saying that you are not reporting on sustainability performance, whether that's because you're not performing as well as you'd hoped, or whether it's because perhaps you are in a regulatory environment that's not conducive to sustainability performance. So I think, circling back, greenwashing is a risk because of legislation, and there are companies out there that are being fined for making incorrect or inaccurate statements about sustainability or inaccurate sustainability claims. And I think with green hushing, I think we will see people start talking about it when they feel that it's not going to have an adverse impact on their business going forward.
Indeed, that's the case, wouldn't it? You had a very sustainable summer holiday. It sounded like you were in Denmark. How's Scandinavia doing? Because we always look at Scandinavia to lead a lot of this greenness debate. How was your holiday, and what did you see there that piqued your interest?
So I'll be really transparent. This was my we flew, so I had an ip with flying, and I still haven't sorted out my offsets, but I will. So normally I would like to try and take the train, but we went to Copenhagen, and key observations about it. Whatever the weather, they cycle, a bit like the Dutch, and same thing. Vehicles are structured for that, so you can see actually it's vehicles and the infrastructure, so there are very clear cycleways, and we have a bit of that here in London, right? But everything is really set up for the foot, for people traveling on foot or by bike, and it's much more difficult with cars.
Smaller population helps.
Smaller population, right? You've got less than 700,000 people sort of in that core, if you like, in the municipality of Copenhagen. And you're absolutely right. So there's perhaps less pressure on the infrastructure, but it's not a big place. I think as a country, it's hard to know what really it was that triggered it, but I often think that that society seems to be very egalitarian. If your king and queen sort of cycle around the place or travel around, despite the fact that they've got palaces you can go and see, they're very much they have a different position in society, perhaps, or they're more accessible.
They don't show off either, do they, Scandinavians?
They're not very showy. Great design. Interesting. There is the agricultural industry is interesting, and therefore this whole farm to table trend that Noma has created a global phenomenon, right? And that's where it began. And I think this idea of that they live close to nature, they respect nature. They've embedded nature actually in many ways into the city. So, steps down into the water. They've cleaned up the rivers and the water around Copenhagen. So everybody swims, hops into the water when they wish. And they really enable you to take public transport rather than take your car. That's
key, isn't it?
Yeah.
I ate at Noma the first month it ever opened.
And?
Delicious, I remember, but probably couldn't afford it much after that first month. It was such a sensation, wasn't it? And on your point about taking the train rather than a plane, I probably used to quite show off about the number of countries I went to, but I've stopped doing that now. When people ask me how many countries you've been to, I say, I've been lucky. I've been very fortunate in life. Because a lot of the younger generation, so we're led to believe, don't think that's something to show off about, and it probably isn't.
No.
We'll see. I mean, I was growing up, that's all you wanted to do, and it's still what I want to do. But
so there was a great tool that I discovered the other day, which was how far you could get on a train in 12 hours. And it was set on Paris, but it showed you actually how easily you can get around by train,
right.
Which sparks a whole other discussion about subsidising train pricing.
My goodness,
if
in
anyone
this country,
from Network Rail is
you need that, absolutely.
Or TfL.
I absolutely get embarrassed when people come to Heathrow Airport, mum, dad, maybe two kids, £100 to get on the Heathrow Express, 15 minutes to central London. There's no excuses for that. I've written about this many times and I'll carry on. You got the Elizabeth line, it's kind of half the price now, but it is so expensive here, isn't it? And I should also add that for 12 years, I've run into work every morning. So I've done my bit of offsetting.
Yeah, you don't need to show off.
No, I'm showing off again there. Katharine Le Quesne, thank you so much. That was fascinating. Stay tuned for more podcasts on HoCoSo's News Hotel in the coming months. I hope to have a podcast on Chinese travel inbound to Europe, which still hasn't come back yet. So that's coming down the pipeline. Other articles in our pages, French hotel giant Accor has made a partnership agreement in Las Vegas on the Treasure Island Hotel, using that to leverage its position in the Americas, where it's arguably never succeeded, up against the Marriotts and the Hiltons, of course, very difficult. We also have a new CEO at Yotel, Phil Andriopoulos, 25-year veteran at Marriott. So he's come through the ranks and is now leading Yotel. The very popular Hubert Fériot is becoming their vice chair, so he's not been sent into the long grass. And also in Marriott news, owner Vastint is beginning its process of selling almost the entire UK portfolio it has of Marriott hotels. It has a price out there of £500 million, which some people told me is a bargain. So stay tuned or read those stories on our pages. I'll see you next time.